What if I told you that 3 computing stocks could potentially double your investment by 2026? And no, I'm not talking about some risky penny stocks or speculative plays. I'm talking about established companies that are quietly positioning themselves to dominate the biggest technological shift we've seen in decades. Here's what most investors are missing. While everyone's talking about AI, they're not looking at who's actually making money from it right now. One company sold AI chips worth more in the last quarter than most tech companies make in an entire year. Another company just integrated AI into software that 300 million people use every single day. And the third? It's offering the same technology as a market leader, but at 30% lower prices, and Fortune 500 companies are already switching. The computing revolution isn't coming, it's already here. And if you're not positioned in these 3 stocks before 2026, you might miss one of the biggest wealth creation opportunities of this decade. In the next 8 minutes, I'm going to break down exactly which stocks I'm buying, why I'm buying them, and the specific catalyst that could send them significantly higher. Let's get into it. Before 2026, the computing industry is set to undergo massive transformation. The AI revolution, cloud computing expansion, and the emergence of quantum computing, these factors could drive unprecedented growth in computing stocks. But the real question is, which stock should you invest in? Today, I'm going to share 3 computing stocks that I'm personally buying before 2026. These aren't just hype plays, they have solid fundamentals, strong financials, and clear growth trajectories. Let's dive in. Stock number 1, Nvidia. First up is Nvidia, the undisputed king of AI computing. Nvidia isn't just a graphics card manufacturer, it's the backbone of the AI revolution. Their GPUs power every major AI model, ChatGPT, Google Spark, autonomous vehicles, you name it. Let me break down why Nvidia is such a compelling investment. First, their data center dominance is absolutely staggering. Nvidia's data center revenue crossed $47 billion in 2023, and that's over 80% of their total revenue. Every tech company investing in AI, Microsoft, Amazon, Meta, they're all using Nvidia chips. This isn't just a trend. This is a fundamental shift in how computing infrastructure works. Second, their latest H100 and H200 chips have such high demand that there's a 6 to 12-month waiting list. A single H100 chip costs over $30,000, and companies are ordering them in bulk. This pricing power and demand visibility gives Nvidia incredible revenue predictability for the next several quarters. Third, and this is crucial, Nvidia isn't just selling hardware. Their CUDA platform, which developers use to train AI models, has become the industry standard. This is a moat that makes it extremely difficult for competitors to break through. Once developers build on CUDA, switching costs are enormous. Looking at the financials, Nvidia posted 206% year-over-year revenue growth with profit margins exceeding 50% and cash reserves of over $26 billion. These aren't startup numbers. This is a mature company growing like a tech startup. Now, let's talk about risk because no investment is perfect. Competition is heating up. AMD and Intel are also building AI chips, and some tech giants are developing their own custom chips to reduce dependence on Nvidia. There's also the question of whether this AI boom is sustainable or if we're seeing a bubble. My take on Nvidia is this. There might be short-term volatility, especially if the stock gets ahead of itself on valuation. But by 2026, AI adoption will scale so dramatically that Nvidia's dominance will only strengthen. This is a long-term hold in my portfolio, and I'm comfortable riding out any short-term turbulence. Stock number 2, MI second, is Microsoft, the powerhouse of cloud computing and enterprise AI. Microsoft is no longer just a Windows company. With Azure Cloud Platform, enterprise software, and now AI integration, it has become a complete computing ecosystem that touches every aspect of modern business. Let me explain why Microsoft is such a strong play. First, Azure Cloud is the second largest cloud platform after Amazon, and enterprises trust Microsoft. Azure's revenue is approaching $100 billion annually with a growth rate of 25 to 30%. What's important here is that Microsoft has deep relationships with Fortune 500 companies that span decades. When these companies move to the cloud and adopt AI, they're naturally choosing Azure because it integrates seamlessly with the Microsoft tools they already use. Second, Microsoft's AI integration strategy is brilliant. They invested $13 billion in OpenAI, and now Copilot, their AI assistant, is being integrated into Microsoft 365, Windows, and Azure. This is revolutionizing enterprise productivity in real time. Think about this. There are over 300 million paid Office 365 users. If just 20% adopt Copilot at $30 per month, that's over $20 billion in additional annual revenue. That's not speculation. Early enterprise adoption numbers are very strong. Third, their gaming division with Xbox and Game Pass is generating over $15 billion in revenue, and the future of cloud gaming is also in Microsoft's hands. This diversification is key. Microsoft isn't reliant on one revenue stream. The financials are rock solid. Microsoft has a market cap exceeding $3 trillion, generates over $70 billion in free cash flow annually, and pays a stable, growing dividend. This is a cash-generating machine with multiple growth engines. Of course, there are risks. Antitrust concerns are increasing in Europe and the US, particularly around their market dominance and the OpenAI partnership. Azure also faces fierce competition from AWS, which still holds the largest market share in cloud computing. My take on Microsoft is that it's a safe computing play with diversification. They have strong positions in cloud, AI, enterprise software, and gaming. By 2026, AI monetization will become clearly visible in their earnings, and I believe the market will re-rate the stock higher. This is a core holding for any portfolio looking for exposure to the computing revolution with lower risk. Stock number 3, AMD. Third is AMD, Nvidia's most serious competitor and a value play. Over the past 5 years, AMD has been competing aggressively with Intel in data center and PC markets, and now with AI chips, it's also challenging Nvidia, and doing so at a lower price point. Here's why AMD deserves your attention. First, AMD's MI300X AI accelerators have launched and they're impressive. They deliver 40% more memory bandwidth than Nvidia's H100 at a lower price point. Microsoft, Meta, and Oracle are already adopting them. This isn't vaporware. These are real chips with real customers generating real revenue. AMD is proving that Nvidia's dominance isn't unbreakable. Second, AMD's EPYC processors are systematically taking market share from Intel in the data center market. Their current market share is 23%, and industry analysts project this could reach 30% or higher by 2026. Every percentage point of data center CPU market share represents billions in revenue, and AMD is winning based on superior performance and efficiency. Third, the Xilinx acquisition in 2022 was strategic genius. Xilinx makes specialized chips for telecom and automotive industries, markets that are growing rapidly with 5G deployment and electric vehicle adoption. This acquisition is adding over $1.5 billion in annual revenue and diversifying AMD's customer base beyond traditional computing. Looking at the financials, AMD is posting 17% year-over-year revenue growth with operating margins above 25% and a strong balance sheet with no debt stress. They are not growing as fast as Nvidia, but they are growing profitably and sustainably. The risks are real, though. AMD has to compete with Nvidia, which is the established leader with deeper pockets and a more mature ecosystem. Manufacturing dependencies on TSMC in Taiwan also come with geopolitical risks that could disrupt supply chains. And there's execution risk. AMD needs to prove they can scale their AI chip business effectively. My take on AMD is that it's a value play with significant upside potential. If they can capture even 15 to 20% of the AI chip market, the stock could deliver 50 to 70% upside by 2026. The risk-reward ratio is attractive here. I'm not betting against Nvidia. I own both, but AMD offers a different risk profile at a more reasonable valuation. Quick disclaimer before we begin. This video is purely educational content. I am not a financial advisor, and nothing I say here is financial advice. I'm simply sharing my personal research and opinions. All information discussed comes from publicly available sources, including SEC filings, company investor reports, press releases, and official company websites. You can verify everything yourself. Every investment carries risk, including potential loss of principal. These stocks may not be suitable for your situation. Always do your own research, understand your risk tolerance, and consult with a licensed financial advisor before making any investment decisions. Never invest money you can't afford to lose. Past performance does not guarantee future results. I may hold positions in stocks discussed. Now let's dive into the free computing stocks.